Hello and welcome to the week ahead. So despite heading into the festive period, this week still does see a slew of Tier 1 data points and central bank events. So starting off in the UK this week, it's set to be a slightly busier one. So one of the main releases will be that of the BOE minutes, which in recent months have become more of a focal point than the actual interest rate decision itself. So as participants look to see for any further evidence of any further shift in the MPC in favour of voting for a rate lift-off. Nonetheless, market consensus is still there to be a 7-2 split, with just Will and McCafferty, the only members of the MPC, voting in favour for a rate hike. So then elsewhere, we do see the release of the UK inflation report. So the headline figure is expected to fall to 1.2% from 1.3%. So this could provide potentially further ammunition to the argument that UK inflation could fall below that 1% threshold within the next few months. Then elsewhere, we do have the release of the UK jobs report. So the headline unemployment figure is expected to fall to 5.9% from 6%. However, focus may actually be on the average weekly earnings component, which is expected to rise to 0.1 to 0.3 from 0.1, therefore indicating that some slack in the economy may actually be being absorbed at a faster rate than initially expected. So then across the pond in the US, this week sees the Fed come to market their latest policy announcement. So interest rates are very much expected to be kept on hold. I'm not looking for rate lift-off for a good few months yet. However, focus will all be on the presence or the absence of the considerable time phrase, with analysts at Barclays suggesting that this phrase will be removed and replaced with the word patient. However, they do say that such a change in rhetoric by the central bank is actually already priced into the marketplace. Nonetheless, this release will also be accompanied by the latest projections from the Fed, which investors could use to mould their expectations for rate lift-off when we do come to next year. From an Asia-Pacific perspective, one of the main releases will be that of the HSBC manufacturing PMI, which previously came in at 50 and is expected to fall to 49.8. So thus we could potentially see the Chinese manufacturing sector slip into contractionary territory, which would be a key focus for participants and could potentially further the calls for further PBOC easing. So definitely one to keep an eye on there. Then elsewhere, from Eurozone perspective, it's not as GSP has quite a busier week, so you have releases some inflation numbers, PMI numbers and the German IFO survey. Nonetheless, we'll be looking out for any comments from European central bankers, particularly given that somewhat lacklustre take-up of the TLTRO that we did see last week. Although it is likely that we'll see ECB speakers stick to the script and say that ECB they're going to review stimulus in the first quarter of 2015. But nonetheless, that's all from me, and I hope everyone has a fantastic week.